I'm trying to film. You gotta leave me alone when I'm filming. Alright? Don't worry, all you bleeding heart animal lovers, he got fed. He was just looking for some food. Let me ask you guys a question.
You ever seen a grown man naked?
No, sorry, that's not it. Have you ever wondered if there's a better time to buy a stock as far as getting a better price? Well, there is, and I'm about to show you. So I'm going to be using an indicator called the RSI, Relative Strength Index. Pretty much every trader in the world is familiar with this thing. The RSI charts current and historical closing prices of a stock during a particular time frame. 14-day is typically average. Whenever I was using it a lot, I kind of tended to go a little faster. I would do like a 9. The longer you go, the less not active it's going to be. The less, I guess you could say the less active it's going to be. If you did a 1 or 2 day time frame, it's going to be moving all over the place. Okay, so we are looking at the ticker right up here, SPY. That is the S&P 500 ETF. This thing is it might be the most popular ETF, popular as far as volume. You can see this is today on the 25th. I'm filming this a few days ahead because I am going to Florida here. So I got to pre-film and pre-edit. Anyway, this thing had like over 2 million shares traded in the last minute alone. So, and you know, that's a couple million shares at $3.82. So this thing is really liquid, meaning you can get in and out real quickly. That's what she said. But anyway, let's see here. I don't have an RSI set up. So what we're going to do is go to edit and go to studies. And let's see, that is a momentum study. Relative strength index, we're going to add that. See, it goes right to the 9. I'm gonna switch it to 14. Maybe it goes to 9 because it knows that that's typically what I would use. And we just lost our chart. Here we go. All right. So we got the RSI here. I'm going to get rid of the volume because I don't really need that. In fact, let's get rid of the MACD. I'll show you that in another video. MACD is really used for trading, pretty much. But okay, now this trading software actually remembers the fact that I have set a RSI line at 30. 30, basically, it's considered that anything 30 or below is underbought, which means basically there's a very good chance the stock price could go up at that point. You could also have a breakdown and it could go down even further. Then you have things like Rsi Divergence, which I'm not really gonna, well, maybe I will touch upon that a little bit because it could help you in finding the right price. Or not price necessarily, but a low point in the stock. Okay, so this is a 1 day. Actually, I'm going to bring that volume back in just so we can figure out when the day started versus when it ended. So boom and boom. So market opened up. I'm in Central Time, Colorado, 7:30. You can see all the volume coming in right here, and then it tapers off big time right at the end. So if you look at the RSI, actually on the right side of the screen, it goes from 0, 20, 40, 60, 80, up to 100. Anything over 70, like this right here, if you look down right in this corner right here, it's at 82, which is very high. So in theory, the stock would be considered possibly overbought. So there's a very good chance it's going to go down. Well, what happened? It went down. Now, it could have gone up. If you see right before the market opened, it got a little push up and right at open it decided to pull back. I never trade the first 15 minutes of the market because of this. It can kind of do whatever the heck it wants. It will be going one direction, and 2 minutes later it will do a full reversal, and I don't really like that. So anyway, back to the RSI. So you see here, you could say, okay, Jeremy, so you're saying buy in here when it's 30 or below. Okay, so if you look over here, it's telling you what the number is. It's showing an RSI level of down to 17, which is extremely overbought, extremely weak. So if you see, it did go up, but not very high. And then it came back down, and then it came back up. You see the correlation, how it's following the stock. So you could say, well, shoot, I should just buy every single time the stock is weak. It looks like I've got a very good chance that it's going to go up after I buy it when it's weak. You'd think that, right? Trust me, I tried this for years. I studied the RSI on different time frames. Man, it's a tough game. But watch what happens. Look up in the top left. This is at it says today 1 minute candle. Oh, and real quick, you can pull up this chart pretty much on any software. The one big problem with Robinhood is there's really not that I can tell. I've never actually looked at the platform on my computer, just on the phone. As far as I can tell, there's really not a lot of indicators available for traders. Webull seems to have a pretty good indicator setup, actually, even on the phone. If you need probably the best software, and it's absolutely free to anybody, is Thinkorswim. Just download that like on a computer, and it has every indicator in the world. I'm using Interactive Broker. This is my big broker that I go through. Back in the day, they had like a $10,000 minimum. Like when I joined, you had to have at least $10,000 in the account just to open an account. I've also done, well, it doesn't matter what other brokers I've done in the past, but I also have Schwab. Schwab has a pretty decent charting software indicators. I know Interactive Broker. I know this software like inside and out. I've been using it for years. I prefer this. I'll probably always use this platform. But anyway, if you go into that top left corner where it says 1 minute, today 1 minute candle, I'm going to pull this down. Now let's see. Now get in your head real quick. Look at how many times this RSI goes up, goes down, up, down, up, down. A lot, right? Watch what happens when I go to a week. Attempting to retrieve data. Okay, here we go. So you can see the RSI, it's going up. In fact, here, let me put a line in at about the 70. Just so you can see that top line, that's going to be overbought. The bottom one is oversold territory, weak or strong. So as you can see, it goes up, drops down, comes back up a little bit, then really drops, comes back up. So you notice this is on a 1 week chart. It's happening a heck of a lot less. But if you start to notice, a lot of these dips, there's less of them, which means your accuracy is starting to really go up when you look at these low points. So like right here, this first one, yeah, it did pop up just a little bit, but then it did come right back down to a oversold level, and then it did the same thing after hours, and then started to come up just a little bit. Let's go to a month. Now watch this. Now you can see the correlation much more clear. This is the actual, this is a line chart rather than candlesticks. But if you notice, when it's really low down here, look at where the stock is. So yeah, it started off really weak. That's what I was saying before. It could still keep going. Just because you're buying it low doesn't mean it can't go lower. But, you know, that RSI level, while it was dropping big time, it stayed down. And then eventually, when it did come back up, look at how much further it came up from where it was down. And then again, it's coming back down. And then when you see when it goes into oversold territory, from here to there, it covered a lot of distance. This is happening again. I mean, this isn't quite oversold. This is 42, an RSI level of 42. So that's kind of like, it's a little low. But once it did go back up to oversold, overbought territory, from here to there was still a pretty significant increase. Again, down here, it's kissing that line right here, and it does go up. Down here, it comes up big time. Here, comes up. So let's take it out even further. 3 months. Now this is really good for, like, if you already have a stock or you want to buy a stock. Check this out now. This is where it starts to get exciting. The 3 month is typically what I use at minimum. So when you start to see this thing hit the line, now pretty much every time it's hitting this oversold territory, it always goes up from there. Always. Down here again. Once it gets to overbought, boom, look at that. Right here again. Where does it go? Right up to here. Nice increase. Drops back down right here. Okay, right here. Goes to over bought again. Dip down, back up, back down, back up. Starting to see a pattern here. Right here, this is recently in the last couple days. Buy here. Right down here on the RSI, it's the RSI level is at 26, so that's very low. And then it pops up big time. So let's go out even further, 6 months. Check this out. Now there's less opportunity because the RSI doesn't get oversold, hit oversold territory nearly as much. But when it does, okay, right over here, yeah, it's a little weak. It pops up a little bit, but like I said, it can always go further down, and it does. Right in here. So this is something called divergence. If you see in here where the chart is, and the RSI is very low, well, the stock goes lower, but it looks like the RSI down here is starting to get less low. It's starting to pick up a little bit. And that's called RSI divergence. And basically what's happening there is the strength of the stock is getting stronger, but the price of the stock has not caught up with that yet. That's a very telltale sign among traders. I've used it many times where stock keeps dropping, but the RSI will start to gain a little bit of strength, and it's basically telling you, hey, the stock price has not caught up yet, and it usually does. And so, you know, if you bought here and then it keeps dipping, you're like, oh man, it just went lower, but you notice, oh, the RSI down here is getting a little stronger. Well, look at where it goes from there. Boom. Once it hits overbought territory, that's a nice jump. gets right back down into that territory again. Actually, this time it goes lower down to 25. And then once it gets to overbought territory, I mean, that's a nice jump. Now, this line right here is a 50 moving day average, and you can use whatever averages, and the average is always going to change as far as the way it looks depending on what time frame you're using. Meaning, if you're using like a daily chart versus a 6-month like this, or a 1-year chart. But what I would do, like if you were swing trading and you want to jump in but you're waiting for a good dip, is this would be a great time to buy right here, because you're getting it at a weak point. You're getting it at a good price. And then once it breaks, now it's breaking the 200 simple moving average. This is actually set up as an EMA, exponential moving average. I'm not going to get into all that. They're very similar. Exponential is just a little bit more accurate, a little more up to date. Either one is going to pretty much do the same thing. But a lot of people would probably argue with me on that, but especially for long term, doesn't really matter. Anyway, buy this thing low when it's oversold, and once it breaks over the 50 moving day average, if this thing holds above that, there's really no reason to sell that. This would be a great, like, okay, you know, it's breaking over the 200. Now I'm going to buy it. Like you might see sometimes like, oh, whatever stock, like in the news or something, this stock just broke a buy entry. A lot of times that's what people are waiting for. They're waiting for it to break a certain moving average. But anyway, you can see where the RSI was low down here. This would be a great entry point. And then like this is the next point right down here. It doesn't quite hit the 30, but if you did buy more, let's say, or you bought initially there, it is going up. Never really gets back down to that oversold territory. Dips down a little bit here. If you were to buy down here, you're going to get a nice little pop. And then finally, it really dips down here again. Once again, if you bought it here, you're going to get this probably a couple days, or this, I think this is about 1 day, probably 1 day of a nice little spike, and then it dropped back down. Once again, price right here on the chart is lower, but the RSI is higher. It's gaining strength. The price of the stock has not caught up with it yet. So what happens from there? Boom, it just pops right up. So now, right now, we're down into that possible good buying opportunity. So now let's go out to a year. All right, let's see the RSI levels. So the RSI right before COVID was really starting to kind of hit the, you know, the news and whatnot. I can't remember, what was it, like mid to late February. And you can see the RSI, it's kind of high. It's not crazy overbought, but it's high. From there, it dips down. It gets way, I mean, it's a big dip, goes really weak. A 21 on a 1-year chart is extremely low. And like I said, you could, going off of this chart, you could buy it, but it does not actually, check this out. I just noticed something. If you bought this here and the stock price keeps plummeting and you're like, God, I can't believe Jeremy showed this to me. It totally screwed me up. Well, if you wait until it gets into overbought territory, which is right here, look at where the stock price is. It's still above, even though it completely crashed out. You're still, if you're waiting for it to get overbought, you're still up. which is pretty awesome. And as you can see, the RSI, I think it stays about the same on this next big crash, and then it crashes again. But if you notice, once again, that divergence, that RSI is starting to pick up a little bit of steam. It's not as weak. And then it starts picking up again. you can see the way it moves with the stock price. And like I said, if you got stuff down here, I did buy a lot of stuff in March. Unfortunately, not as much as I would have liked to. No one knew what the heck was going to happen with the market. I mean, let alone the whole world. Anyway, then it goes into overbought territory, but it never really crosses down over this 50. It gets really close over here, but you could still hold that. And then let's see, the next big dip down, it crosses, breaks that 50-day moving average, and it gets pretty low here. Let's see, it's 40, 35, I don't know, 35 to 40 area. And if you bought in there, it's a nice little pop. Wait for it to get rid of that. Oh, geez. Stupid. This thing's in the way. Go away. There we go. Sorry. Anyway. God, I've said anyway 1,000 times. That's like my my catchphrase. It should be on my tombstone. Anyway. Just kidding. RSI is low. Stock price is low. Where does it go from there? Up. So as you can see, the main point of this video is the RSI will give you a good indication. I'm not saying it's a crystal ball, but it's a good indicator of where the strength of the stock is. Are you buying it high? Are you buying it low? If you're looking at a 1-year chart and it's above the 70, like in this would not be the optimum time to buy. So anyway, that's about it. I just want to make a quick video. This thing's probably going to end up being like 10 minutes like they usually are when I say quick video. But hit me up in the comments if you have any questions, concerns, if you have any questions about this whatsoever. Hopefully you guys are seeing this and I am back safe from Florida. I'm filming this a day before I'm leaving. So anyway, hopefully I get this thing out in time because I'm not going to do any editing when I'm out on vacation. I'm going to shut up now. I've talked way too much, said way too much. I love you guys all. I'll see you next time. Bye.
Joey, have you ever been in a Turkish prison?